and welcome to the AI with Arun Show. In this episode, we'd like to talk about a significant move in the world of private equity and AI. On August 25th, 2025, private equity firm Thoma Bravo announced its $2 billion acquisition of Verint Systems, a strategic play to take a leading role in the fast-growing customer experience or CX automation market. Thoma Bravo's strategy here is a classic buy and build approach aiming to create an AI-driven CX powerhouse. They're doing this by combining Verint with one of their existing portfolio companies, Calabrio, to build what they call the industry's broadest CX platform. This new platform will compete in a market that's estimated to be worth over $50 billion. This merger makes sense because Verint's CX automation and Calabrio's workforce engagement management tools are highly complementary. A key part of the deal's value is Verint's focus on AI. Currently, half of Verint's annual recurring revenue, ARR, comes from its AI-driven solutions, which aligns perfectly with Thoma Bravo's strategy. Despite its strong AI focus, Verint has been facing some significant performance challenges. Over the past 3 years, shareholders lost 61% of the value, and the stock had declined 25% year to date in 2025. The company was also struggling with revenue growth, seeing a 5.96% decline over a 3-month period as of April 2025. On top of that, cash flow was a concern, with a year-over-year drop of 18.7% in operating cash flow and a significant fall in free cash flow in the first quarter of 2026. Thoma Bravo's playbook often involves targeting profitable companies that have positive cash flow but are experiencing sluggish growth, which fits Verint's situation perfectly. This acquisition comes at a very opportune moment. The customer experience management market is projected to grow from about $22 billion in 2025 to over $68 billion in 2032, with a CAGR of 17.3%. This rapid growth creates a perfect environment for consolidation, which is exactly what Thoma Bravo is doing. Now let's look at the financial details of the deal. Thoma Bravo is paying $20.5 per share in cash, which is an 18% premium over Verint's unaffected cash share price. The total enterprise value, including debt, is approximately $2 billion. A significant portion of the deal, for $2.7 billion, is being financed with debt led by Banco Santander. This allows Thoma Bravo to avoid diluting equity while taking advantage of Verint's stable cash flow. The acquisition aims to improve margins, which is a key goal for private equity firms, as historical software deals have often fallen short on this front. The move strategically positions the new combined company for long-term growth by tapping into major market trends. Enterprise adoption of agentic AI and hyper-automation is accelerating. By 2028, a third of all enterprise software applications are expected to include agentic AI. The acquisition also addresses the growing need for integrated omni-channel platforms that can manage complex customer journeys. By combining Verint and Calabrio, Thoma Bravo is creating a more formidable competitor against major rivals like Salesforce, Microsoft, and Oracle in the CX automation space. To summarize, Thoma Bravo's acquisition of Verint is a strategic play focused on a few key areas. First, it targets the rapidly growing multi-billion-dollar customer experience automation market. Second, it creates value by addressing Verint's performance challenges through operational improvements and the strategic combination of Calabrio. Finally, it positions the new company for future growth in AI automation, leveraging the fact that 50% of Verint's ARR, annual recurring revenue, already comes from its AI-driven solutions. This acquisition is a clear example of how private equity is leveraging AI and the strategic consolidation to build dominant players in fragmented, high-growth markets. With that, we come to the end of the show. Support our work by joining us as a member and like, share, and subscribe.